Hello everyone, this is Calvin, Professor C here. This channel is all about teaching new mortgage agent making more money and faster. Today we are going to tell you everything about port and assumption of mortgage. Stay tuned. Hello everyone, this is Calvin, Professor C here. So not too long ago, one of my team members asked me about something, and I haven't heard about this term for a long time. And my team member asked me, hey Calvin, have you heard about something called assumption? And I say, well, yes. And he asked me, well, what is a mortgage assumption? Do you know? If not, I'm going to tell you everything about it, as well as another term that is easily confused with assumption, which is port. As you can see on the screen, I have the example of port and what it is. So this term is a little bit more popular than assumption, and more people have heard about it. So I'm going to tell you about it first. So what is porting a mortgage? So when we refer to porting a mortgage, let's look at the screen. What we mean is we have two houses, okay? The old houses, the owner is Mr. and Mrs. Wong. Mortgage is $500,000, rate is 3.14. Say that assuming that this is a very good rate, right? Say that the market is right now is 5%. So, they want to keep the 3.14%, but they want to move from the old house to the new house. Is that possible? Yeah, might be. First, a lot of people talk about this as a transfer. This is not a transfer. There's nothing called transfer. You have to re-qualify this. You cannot just move the mortgage from the old house to the new house, even though the amount is $500,000. So you have to, just like a new application, you have to reapply for everything. You have to submit your income document. You have to check your credit bureau, and if everything works out the same, and you get the approval from the bank, then a lot of the time, not every single time, but most of the time, you can port the old mortgage to the new, from the old house to the new house. Everything remains the same, including the mortgage amount as well as the interest rate. There is a couple of benefits for doing this. The first one is you keep the existing mortgage rate. So assuming this is a very good rate, maybe I should change it to 2.14 so that you can understand it easier, because right now a lot of mortgage rate is 3 point something. So now you see, if it is 2.14, you understand what I mean. Say that this is a very attractive rate, and the client doesn't want to lose this rate. So if they can, if the bank allow them to port it, then they keep the existing rate, which is great. So this is one of the benefits that you get from porting a mortgage. The second benefit of porting a mortgage is you avoid a penalty. You avoid a penalty. So say that normally if you sell this house and it is not mature yet, you have to pay a penalty. And then on the new house, you get a new mortgage, right? So this is usually how it works. But if you port the mortgage, you will avoid the penalty of the old, from the old house to the new house. So that's the second benefit of doing a port, right? So this is, a lot of people knows about this. But assumption, not a lot of people know and not even heard about it. Even people working in the bank may not have heard about it. So what is an assumption? So an assumption is, say that this is an old house, owner is Mr. and Mrs. Wong, mortgage is $500,000, rate is 3.14. Now this one, if you look at the graph, it's different. It's the same house, same old house. The mortgage is still $500,000, the rate is still 3.14, but what is different? The owner. Do you see the owner is different? This is Mr. and Mrs. Wong, and this is Miss Chen. So assumption means you have a house, someone is taking over your house, and they keep the existing mortgage on the house. There is no old house or new house. There's only one house, but the owner is different. So let me give you one example. Say that a parent is, maybe is retiring and trying to move to, say, Bahama, right? They want to move to somewhere warmer. They want to move to Bahama, and they want to, have the house, give it to their daughter. So then, they don't want to pay the penalty and then break the contract of the mortgage and then give it to their daughter, because then the penalty would be very expensive. So what they do is, the daughter obviously has to qualify for the mortgage on her own. So say that she has a good income, good credit, everything is good, then she qualify for the mortgage of $500,000. Then from the assuming this is the parents or something like that, it's not the same last name, but it doesn't matter. So they can have the same mortgage with their daughter as the owner now. So that way, again, what is the benefit of doing an assumption? Well, again, Mr. and Mrs. Wong doesn't have to pay the penalty. That's one. Okay, and Miss Chan, their daughter, can enjoy the rate also. So that's another one, right? A lot of people ask, well, do they have to be related, like daughter and parents or something like that? No, in fact, this works for non-arm's length people. That means they are not related, right? So they can be a total stranger, and you can still do the same thing. You can still assume the mortgage. Now, the reason why I say that I haven't heard about this for a long time is usually when the interest rate is going up, you will hear this more often. And the reason is because, say that, this is, again, it's a 2.14. And you know what? If Miss Chan right now is going to get a new mortgage, how much are they getting? Say 3.4, 3.3, something like that, right? So Miss Chan has an incentive to take over that mortgage because she wants a low rate, right? You can't get it from the market. The market is right now is 3 point something. So Miss Chan has an incentive to get that low rate. Meanwhile, Mr. and Mrs. Wong also has an incentive to give that mortgage over to Miss Chan because they don't have to pay the penalty. They avoided the penalty. So that, to both of them, there are benefits for them. So in an increasing interest rate environment, assumptions are more usual than the decreasing interest rate environment. But right now it's 2019. If you look back, in the last 10 years, ever since 2008, interest rate haven't been increasing. It actually has been dropping since 2008. So, think about it the other way. If the interest rate is 5.14 here and here, and the market is only at 2%, would you want to take over a 5% mortgage? No. And that's why in the last 10 years, not a lot of people have done an assumption, because nobody wants to take over your old mortgage because it's more expensive than if I go out to a market and get a new mortgage. Okay, so there you go, assumption and pot. Hope you learned something, and if you like what I say, and if you like what this channel is teaching you, hit the subscribe button down below and maybe give me a comment. Okay, thank you.